All right, good afternoon, everybody. Sound okay? Thanks for joining me. Or good morning, depending where you are in the universe. So first things first, a little bit of housekeeping. Hi guys. I actually clean forgot that I had a webinar last Monday, and the market volatility and things. So I humbly apologize if you try to log in and there was no sign of David. That won't happen again, so I apologize for that. But thank you to FX Street for having me on in this little makeup period. All right, guys. So today's webinar, as usual, is ask as many questions as you see fit. It's on. I'm principally going to talk about, or the headline was talking about stochastics, which I will do. But I think it's also the market merits a little bit of time of doing some analysis. So if you would like, we'll split this. We'll do half of it stochastics, half of it some market analysis, and maybe put out some trade plans. I'd also like to, the last 3 or 4 of these, we put together a couple of plans. Now, I don't know how many of you are actually been paying attention to it, but a couple of our plans that we looked at was a pound yen short at 192.50 for 188, a USD yen short from 124 to 118, a S&P 500 short from 21 to 1980, a nat gas buy, and an Aussie long at 72.50, which is looking a little bit ugly at the moment. But a Euro Aussie short, and the Euro Aussie short is the one that's hurt us, hasn't it? I don't know about you guys. I thought the S&P drop on reflection was pretty easy. I mean, we expected it and it happened. There were a few, just watching CNBC, there were a few I told you so's, but there were also a lot of people caught out by it, which was surprising to me. I mean, nothing goes up forever, right? The thing that did surprise me, however, and I don't get, not a lot shocks me in the market anymore when you've been doing it, forever. But the departure between the Asian currency pairs, or rather the commodity pairs, and the Euro stuff is surprising. And we were Euro bullish, if you remember. I mean, we've been Euro bullish now for about 4 months, despite all the Greece things. Been very Euro bullish, but I did not expect the Euro to really gain like it did relative to the Aussie and the Kiwi and some other stuff. So made lots on the swings, lost a little bit more on the roundabouts, which is a little bit awkward, but here we are. All right, so please guys ask questions as needed, because otherwise I'm just talking to myself, which I can do that. Typically, when you talk to yourself too much, people want to put you in a padded room in purple pajamas, but that's fine too. So the stochastics for me, and I'm going to talk about stochastics just because that's all I use in terms of oscillators. All right. I used to be a proponent of MACD, but I found that, like everything in one's trading, it sort of evolves, and you throw out stuff you like, and you throw out all stuff you dislike, and keep stuff you like. And stochastics is one thing that I like. Principally, I'm a price action guy, fundamental guy, so I'm watching more the price action rather than the oscillators. The other thing I'd also like to mention too is, and this more goes out to the newer trader, is I firmly believe that too many oscillators is actually doing you a lot more harm than it is good, because you're going to get conflicting signals. And the other thing too is that oscillators in general don't really predict themselves. In other words, they don't really project price forward. They more react to what's happened, which is obviously all of, most things, to include price action. I mean, nothing shows you the path per se specifically. You still have to read between the lines. But stochastics, MACD, whatever you want, CCI, they're all running off what price has already done. Okay? So you're getting a past tense view of things. Number two on that, second thought to that, is also that they are trend specific. Sorry, I lost my train of thought there for a minute. They are trend specific. So if, for example, if this is your trend up, it's just sort of ticking up there, and I'm actually going to expand that a little bit. If this is your trend, you're doing this, nice little steady uptrend, for instance, and your stochastics is doing something like this. It's kind of for instance, and then you're getting your blue crossover, whatever. Maybe you got it figured out. So my point being here is when you get these little crosses down, price is probably very close to, if not at support, isn't it? And by the time you actually get a concerted cross up, it's probably right around the double top. So even if you have stochastics speeded up in this case, by the time that you've got a prototypical signal, it's an uncomfortable area to trade it. Have you guys experienced that? And then that makes it confusing. So how do we get around this? I don't know if this is a product of experience or what, but I like to extrapolate what it'll look like in the future, as opposed to react to what it looks like in the past. In other words, I like it to conform to what I have in mind over reacting to what it's done, because in that way I'm not perpetually late or perpetually early. All right, so let me give you an example of this. Oh, okay, before I do that, the third thing to keep in mind, so the first thing we talked about is too many oscillators being a problem. The second thing is they are trend specific. And then the third thing, probably most importantly to think about here with stochastics in general and any oscillator, is that they are time frame specific as well. All right. So if you remember last week or last month, I know these things are spread out, but last month we had a conversation about price action. And more specifically, we had a conversation about time frames and multiple time frames. Okay, so I'm just want to pull up. Actually, we can use this copper chart. I'm going to take all these indicators off. All right. Now, for those of you that are interested, my stochastic settings are 853, and this is about to get nitty gritty here. So please try and sort of stick with me, because this is one of those very nuanced things. It's not a generic lesson by any stretch of the imagination. This is a very specific, very nuanced thing. All right. And if I lose you, I apologize. The recording will be out in a couple of hours. I would encourage you to watch it again. All right. So if the crash course price action, right? If your daily chart looks like this, here's a daily, and you go from a downtrend, making lower highs, lower lows. This is price action 101. You make a little higher low, break that previous high, drops all the way down to the bottom, and you start a new little trend / retracement. All right. If this is your daily chart, and we just highlight this area on a 4-hour, okay? So let's look at that on an H4, that yellow area there. Okay, your 4 hours is going to be doing something like this. Oh, cool. Okay, break up. Okay. Step down. Like mini change of trend, and up it goes. Okay, so that took us, it's basically this stretch here in this 4 hour. And this swing high would be this. Okay, with me so far? Pretty normal stuff, right? And those of you that are proponents of Elliott wave are looking at this going, well, let's just say, I have no idea. I don't know what these waves. It's by coincidence and observation. All right? So the oscillator would look something like this on a daily. You know, threaten to cross up, right back down, diverge. You know, and the cross would be something like this. Sorry, I'm not artistic in any way, shape, or form, but you're getting that. So my point being is this, is that you would get sort of this exhaustion look down, and the stochastics would look exhausted halfway through the move. That's key. Okay? And then you would get this beautiful cross up, and everything would look good to go right at the resistance point. And then you would start to sort of create this divergence. But more importantly, you would get this overbought look, because, you know, this might be an overbought line. You would get this overbought look halfway through the move. So my point being this, is that stochastics are at their most bullish overbought, and are at their most bearish oversold. But isn't that the exact opposite to what we've been learning all these years? I'll say it again. In my mind, stochastics are the most bullish overbought and the most bearish oversold. Okay? You know, in the same token, the 4 hour on this would be looking something like this. You know, if it came down, and I want to concentrate more on this sort of rise area here, you would have something like this going on. Okay? And you would have this beautiful cross to the downside. You'd have this beautiful cross to the downside here. You'd be thinking, cool, man. That's very bearish. I'm going to be short. Wonderful. Meantime, you're kind of right here. Your daily is against you. The 4 hours with you, but you're at resistance. Do I say that for all time frames? Yes. But it is, this is going to sound convoluted, it is fractally specific, because it is Because you cannot fight the daily with a 4-hour stochastic. And I'll make more sense of it now in a minute with examples. All right? So your 4 hours pointed down here. This will all become clear in about 2 minutes as I start to bang through examples. Okay, so your 4 hours cross down, but you're kind of at support, but you're coming off daily resistance in the context of a downtrend. In my mind, this is not a bearish stochastic on the 4 hour. I would need a second cross there that would be compelling to me. And now with that second cross down, after sort of rising up another little level, then I'm ready to short. And like I said, this is going to get convoluted. Let me use a different example. This is a river. This is the Mississippi River. It is a very big river. It's going towards the ocean. Okay. Other rivers, which are tributaries, might flow into it. You know, this might be the mountain here. The watershed. Okay. It's possible that although the river direction is this way, we will call this the weekly chart. Okay. It's possible that when the water sheds off this mountainside, it's actually going away. We'll call this this is the ocean. When it sheds off this mountain, it's actually possible that it's going away from the ocean into the larger river. And it's possible that the Mississippi actually winds away from the ocean at times. But it's overall direct is towards the ocean. So your 4 hour and daily might be this tributary to the major river. So the same thing applies to how stochastics operates. You might have a stochastic that looks like this on a weekly. Okay. Looks like this on a weekly, which is, in my mind, nothing but bullish. And on a 4 hour, so that's a weekly, and on a 4 hour, you might be in the context of this sort of area, and on a 4 hour, it's done this. I'll get to your questions just a sec. Okay, so on a 4 hour, you got something like this going on, which is hard down. So this 4 hour chart would be this, tributary going away. This weekly chart would be the sort of main flow of the river. So this gives us two ideas. One, anything traded against the river, against the Mississippi going to the ocean, is a short-term trade and should have a short-term expectation. And anything going with the river, when these things congruently line up, is something that has a much more sustainable look to it. All right. Does any of this make any sense? So Alice is saying, I think more important as an example was a daily was resistance approximately 50 on the Stokes. Yes. Exactly. Exactly. So the support and resistance plays a role too, and we're going to talk about that. It's a difficult thing to explain and contextualize, isn't it? Because you can look at 4 time frames and get 4 completely different oscillator looks, correct? But the way I use it is like this. I want to know what that main river direction is. Because the oscillator might bend here a little bit and move around, but the major direction is resolute. So let me give you a different example. If we look at this copper chart, okay, and I'll show you this on a monthly, or rather on a weekly. This stochastic, it'll be on the same link. The question is, where can you get the video afterwards? It'll be on the same link that you logged in with. Additionally, I will tweet it out later at Forex David, if that's helpful. Yeah, if you go on webinars and then look up my speaker name, all of them are archived there going back 5 years, to include this one. And I don't know, FX Street's very good about putting them out, I don't know, 4 or 5 hours after the webinar, sometimes less than that. All right, so let's look at copper. This is a weekly chart. Fundamentally, things not so great with China slowing down. But my thing with China is it's not as bad as it seems. I mean, India, the headline today out of India, I know India is not China, but the headline out of India today was, oh, GDP collapsed to 7% from 7.4 expected. 7%. We talk about raising rates in this country at 3 and change, which in itself is preposterous. But that's for a different rant, for a different day. All right, so weekly stochastics down. Let's keep that in the back of our mind. Okay, so if anything, the Mississippi is still pointed towards the ocean down. All right, now let's also keep in mind that we have a pretty good looking little support line dropping down here and a major psych level of 2 just below this. Okay, something to rethink about. Now let's look at a daily chart. The daily chart is a large tributary to the Mississippi. Is this river analogy silly, or are you sticking with me with this? Are you going to humor me? So here we have serious stochastic divergence. As price is dropping, stochastics is rising on the lows. Okay, and we're coming off the support. So although it's the weekly is down, this daily is actually kind of up. But notice how the signal's being created right as this thing's coming off resistance. This is the thing about stochastics. This is why you cannot follow this stuff without some insight as to how it's gonna look when you need it to look that way in the future. Because if you're following it, you're gonna get ripped. It's that simple. You're gonna be shorting and buying it at the exact wrong spot. Okay, so weekly is down, daily is up, but coming off resistance. We'll put that as a little asterisk as a nota bene. Okay, so confusion reigns. Should I be a buyer? Should I be a seller? Well, in my mind, it's saying coming off support, larger pullback coming. What's that going to look like? Well, price action suggests a little higher low, higher high scenario. Stochastic cross up off support with stochastic divergence. Maybe people will realize that China is not as bad as everybody thinks. Possibly. So would it be interesting maybe then coming off resistance daily up that if the daily starts to look something like this? And price drops here. Boom. Boom. Okay. In my mind, this is actually a bullish stochastic because it's still orientated to the upside. Remember, weekly is still down. Okay. What about this 4 hour? So the 4 hour is saying down hard. So the weekly down, daily up, but coming off resistance. 4 hour hard down. So this, and oh, by the way, coming off resistance. So this is saying to me this might bend as it bounces off the support. It's saying to me this might bend to the upside, but it's still orientated down, so it means that there's probably going to be a second step down like this. Guys, all of this is done through observation, through just years of sitting in front of the chart, by the way. I have no life. Okay, so this is saying this is likely. All right, and then it develops a little bottom and does something like this, as price does this, which is, oh, by the way, a retest of that trend line. And now the 4-hour will cross up. The daily would have flexed to the downside and then look reorientated to the upside. So the daily chart, once this starts to develop a bottom and go up, the daily chart then, remember, its stochastics are sort of, they made a bit of divergence and some stuff. But their stochastics would probably flex and then recross to the upside. Like this. And then your 4-hour would be congruent, but your weekly would still be down. So this is saying to me, from a price action standpoint, going back to the daily, is that we're likely to retrace second step down because of the 4-hour. Daily flexes over, finds a little bottom, jogs up to the next level, which happens to be resistance. Right? And now the fight's on. Now we get the same kind of look on the daily chart, which goes along with what the weekly was saying. So stochastics for me are a time-sensitive, trend-sensitive thing that need to be extrapolated into the future, because otherwise you're going to be hit trading at exactly the wrong times. Does any of this make sense? I'm not sure I've articulated this particularly well because it's very much a mind's eye conceptual thing. It's difficult to give you some absolute quantifiable explanation. It's one of those things you have to see over and over and over again. How many candles on one stochastic cycle? I do not have an empirical figure on that. And also I would have to say that it varies because some cycles are way quicker than others, And sometimes you can have stochastics overbought or oversold for a very long time. And that's what I'm saying, that to me an overbought stochastic is a very bullish stochastic. And an oversold stochastic is a very bearish one. It's the ones that are hard down or hard up like this 4-hour that matter to me. I look at this one and I'm like, that's off resistance in the weekly downtrend, concerted, nice, cross, open. It's at almost oversold. That's bearish. That means a second step down. That means larger retracement. Right now I can start looking for this if I'm bullish, which I am. Now I can say, right, I want a 224, 220 trade looking for 240 and change. But this here makes me wait. This here says, don't long here. It's hard down. It might flex. It's likely to flex like this. And look bullish, but it's not. Likely to cross back down. Do the big guys use stochastics? Sure. I don't see why not. Guys, I have a few friends that work for Goldman that are on the floor. I have a very good friend that's an energy trader for Exxon. And they use all the same stuff we do. They are no more educated. They are no more smart. They just have faceless money and MBAs. And it doesn't matter if they win or lose. I mean, it does, but it doesn't. They just do other things. But they have all the same information that you and I do. When is giving a half cycle? To me, I mean, a half cycle, you're going to see a lot of this. You know, if it's trending up, you'll see stochastic sort of half cycle down. And then, you know, you'll get some of this sort of thing going on where you get fake crosses the whole way. So if anything, you know, if you want to, the easiest way to interpret trend, and I want to get to a few trade setups here in the last 15 minutes. You know, this little envelope of mine here is gimmicky. It's gimmicky, but it shows you trend. And guys, your settings are, you know, I like these particular settings. It's what I learned to it, so I've kept them. But it's, once again, you see, here's the thing, okay? And here's just a, this is a conceptual idea about trading. Is, let's say that you are, and I'm full of analogies today apparently, let's say that the universe is made up of 5 stars. We'll do 3 just because it's easier. It's less to draw. And this little man over here is looking at the stars. And this little man over here is looking at the stars. Right? The 3 stars remain. The perspective by which he's looking at them is different relative to where he is. Okay? The same thing applies to price action. Price action moves the same whether I look at it through price action, through a cloud system, through stochastics only, whether I look at it through Elliott wave. The price action, the way it moves, is independent of perspective, isn't it? So how I trap it, I can have a mousetrap that's in the shape of a box. You can have a mousetrap that's in the shape of a triangle. As long as we're both catching mice, that's what matters. So the price is going to move independent of perspective. So settings are a guideline to how you're going to build your telescope to look at it. Okay, so I like 835. You might look at it and say, I prefer 966. Because in your mind's eye, you know conceptually how it needs to look for you to trade it. The way it interacts will be different to mine, but the price will move independent of that perspective. Okay? And this is why I always say to people, you have to develop your own way of looking at it. Okay? And it's your own analysis, you know what I mean? That's very, very important. So yes, I like those particular settings. I like those particular settings for myself. And I've just used them so much that I know how they interact with price. Isn't Stokes good in a ranging market, very poor in a trending? Sure. The thing is though is that that's also a time frame specific thing, isn't it, Abdul? I mean, you know, for example, we'll go back to our copper example because that's what we've been looking at. On a 4 hour, it's for all intents and purposes a range, isn't it? You know? And if you look at it here, you know, this is the thing that I like stochastics for. If you look at it here, a nice big fat cross down. You know, it's almost in the oversold. I probably skipped a candle there. Yeah, I mean, you're almost in the oversold, and then it has another little leg down. You know, on a 4 hour sense, this sucker's in a range. On a daily and a weekly, you know, very much a downtrend. So it's the perspective relative to the trend you're looking at that matters. That doesn't really tell you a lot, but And guys, honestly, if you took stochastics from me and said no more stochastics, I wouldn't skip a beat. You know, they are 3% of the puzzle. They are not the puzzle. You know, and said differently, if I removed the stochastic and we looked at this copper chart and I showed you this, you'd be like, yeah, it's probably a fairly limited risk trade. I could buy it there and look to sell it here. You know, and because of the relative support, we'll probably see sort of something like this. You know, hold the support, jog down through it again, and try to base for a while. You know, by virtue of this support here, you'd mess around there for a bit, but you'd run into this stuff, which is a 50% fib of this drop. Do you see what I mean? Independent of stochastics, you have a trade plan very easily. It's just another thing. It's just another thing to put in one's head and have at your disposal. But you know, it's such a small piece of the puzzle that it's very limited in its scope. You know, let's take a quick look at let's take thank you. And like I said, it's so difficult to it's such an intangible thing, stochastics. You know, I always like to come on and try and give you something hard and empirical that you can take and use in your own trading. But this is a very intangible sort of thing that it's difficult to articulate and put into an actionable thing without a lot of observation, a lot of patience. And you don't necessarily need it. All right, so here's an S&P chart. And we topped out here at the 21s, broke down beautifully. We actually had 1980 as a first target, and then after that, I think we were talking about sort of 1840 or something, which we achieved quite quickly. The drop actually came a lot quicker than I expected. I thought it would be a little more controlled, but I think it was just rangy for so long that when it unleashed the dogs of war, it unleashed the dogs of war. So because we've been talking about it, let's throw some stochastics on here for the heck of it. And obviously, the yen is well correlated with the S&P right now, so you can apply yen analysis to S&P analysis if you prefer. All right. Now, is this weekly stochastic bullish or bearish? It's ugly, but to me that's a glide scope down. From a price action standpoint, we've got a double top, break of the lows. So from a price action standpoint, you've got a price action rechange to the bottom. You have come off very significant support. Very significant. And if I draw a fib of the drop, I'll get to a question in just a sec, Alistair. Yeah, I wanted to ask you about Aussie yen. We'll take a peek at that. You know, this is what I was looking at, is the 382 is at 1720 and the 50% is at 1600. We're actually going to mark those just as reference points. Make it purple. Why not? You know, Monday's sort of a purple kind of day, isn't it? Okay. All right. I'll put that on there. Right. So those are our next. It's also interesting that they are sort of short-term levels. Keep in mind. So 1720, and then we'll call it 1600. We'll move this up. We'll move this up just to match that low. just to match this little high and low. It's close enough to the 382 to be meaningful. So 1740 and 1600. Okay, now weekly stochastic down, coming off support, at resistance, big rejection here on the wick factor. Right now, let's go to our daily. Daily sort of aggressively crossed up, bouncing off support. But notice how it's above. I will absolutely try to get there, yes. Whatever I don't get to today analysis-wise, I can always publish on my twit. Because we have five minutes here to get this handled. Notice how we broke back above this we'll call it 1980 for argument's sake, 1970 level. Daily up, and I bet you the 4 hours also pretty freaking bullish. You know, it's crossed down here, but the price action hasn't really. Notice how little downside push we've got relative to this large stochastic swing. So if anything, I would almost expect this to do sort of something like this. Okay, because of the 4 hour price action change off the support in the context of the weekly change down. So this should give us sort of something like this. No. Okay, now we're ready. Why? Because this is support of the rise. The stochastics will be bullish at the time. That'll take us back into the resistance. That will get all the talking heads on CNBC going, you see, I told you 1800, 1820 was a buying opportunity. I told you, man. Look, see? Next thing you know, they're sitting there minus 100 points on the S&P going, what? Okay. So the general public's back on the train again. And now we're rocking, and then that weekly chart will sort of start pushing back to the downside. The daily will be in alignment. We're good to go. But because of the fractals, you know what I mean? You've got 4 hour up, daily mixed bag coming off support. We'll put mixed for M. Weekly down. You've got to wash out these two. You've got to finish them up. And this would do it. Into the resistance and down. So I am a bear in this area. We've also got non-farm payroll Friday. ECB stuff coming on Thursday. Aussie rate statement tomorrow. Chinese manufacturing today. Okay. Nice resistance zone. So yes, I'm going to be looking for shorts all the way through the sort of 2010 to 2030 range. Looking for 1740. Looking for 1600. You with me? Right, let's look at oil there real quick. And I'm sure there's some dissenting voices on this. I'm just giving you my perspective. Gotta remember, guys, I got nothing to sell you. Nothing. So, you know, whatever. So look something like this. Is what I'm hoping to see. Okay, and that'll make the daily look sort of something like this. On the stochastic. How about we do this? How about we take a screenshot of that and we will compare notes on that next time. See how we did. Okay, I will keep that for FX Street Prosperity. Right. Let's have a quick look at oil. We have 1 minute. And the CAD, the peso, all of these things are trading hardcore on oil right now, aren't they? I mean, like tight correlation. Euro SEK, Euro NOK, Mexican. Um, I'll run a little bit over Mr. C until I get the. We'll do a few extra minutes of FX Street allows. So here's oil. Boy. You know, oh, in other news, I'm just loading a chart in the background. Kanye West running for president 2020, ladies and gentlemen. Right. Okay, let's look at the USO here, just because I think I can get a little more data on the backlook. By the way, this is the oil ETF. No, it's not. It's unfortunate. Anyway, we'll do our best here. So the oil companies don't necessarily make money. I mean, they have to source the oil, take a rig out there into the ocean, hire a bunch of people, pay their insurance, pull this stuff out of the ground, transport it back, put it in a barrel, move it around the world, sell it for $40. That by itself is pretty amazing. They're not making a ton of money. The guys that are making money are the refiners because the input costs have dropped and the output not that much cheaper. I mean, gas in California is well over $3 a gallon, which I know that you guys in the UK are going Pegler. It's like $4 a liter here, dude. Anyway, my point being is this, is that I just don't think that oil's necessarily going anywhere. Right. They're not, you're absolutely right, Abdul, they're not exactly battling. I know, Dale's saying, well, 35% of people will vote for him and 55% will consider him legit. I know, it's absolutely bizarre. We used to have the Teddy Roosevelts of the world, and now we got celebrities thinking this is just another thing to do. Anyway, whatever. We'll have a rant on a different day. All the talents in business, not politics anymore. My point being here is this with oil. Is that I just don't think it's going anywhere. You know, China's putting 1 million cars a year on the road, granted. But our supply lines have improved so much that I don't believe that oil is magnificently bullish on the medium term. So if anything on this, I'm looking for this kind of thing. Support here at 42. I think we're going to jog down towards that level, head up more towards sort of 47, 48. Come all the way back down, challenge the lows at 38, and then we just do this sort of thing. You know, one maybe peak to the bottom, this kind of thing. So if anything, if you have to trade oil, you know, and here's another classic example. Weekly, bearish, bit of support. I'm talking about stochastics, down. It's crossed up, yes, but down. Daily, up hard. Stochastic divergence like crazy. Price is making lower lows, but you're making higher lows on price. It's crossed up aggressively. Got a little change of direction price there. You got support at 42, the figure. If I take a fib of the rise, that's right around the 50%. So ideally, I'd like to see sort of something like this. Okay. Jog up towards this 48, 49 zone, and then come right back to this area. And I really think that'll take you through 2 weeks worth of trading right there. You know, so I'm bullish at sort of 41, and I'm a bear at about 48, 49. And then we just work out the range. We'll just work out what's happening from there. But, and that's still good stuff. I mean, those are 10%, 10, 15% swings. I mean, that's no joke. But as far as oil being the buy of the universe, I think you're going to have dead money for a long time, be having to pay a lot of carry and roll charges if you're very bullish. I almost think you're better off doing this if you have any counter trend. If you have any counter trend spirit in you. Here's a Mexican peso. This thing's got crazy. Look at the distance to this 21 EMA. Distance to this 21. I mean, it's just out there, man. So this is oil correlated. You have the potential for a little weekly evening star there. I think you can almost short somewhere up around the 1710 area with very limited risk. Try to trade that down towards 1650. That'll bring you back down towards the support zone. And said differently, the opposite correlation would take oil back up towards 48. But this is a much less sort of risky trade with more kind of a mean reversion look to it. Something to think about on the currency side. But big margin requirement here. Keep that in mind, everybody. All right. So I have mixed feelings about today's session. I feel like it's a little bit more convoluted than maybe we should have got into. But oscillators are one of those things that we all try to use on occasion or have tried to use. And it's a nice thing to have in your back pocket. There's a couple of times, and I think if nothing else, oscillators will keep you out of trades that maybe you shouldn't be in too. So they have that working for them. But otherwise, if you have any questions, by all means, you can tweet me at ForexDavid. That's ForexDavid. And or obviously reach me on FX Street. And we'll see you guys next month. I know we have another thing going on next month. I'm not sure what the topic for that is, but if you have any topic ideas, also ping me too. I'm happy to talk about whatever. All right. Take care, everybody. Thanks, FX Street, and we'll see you next time.